FXN, what's up guys? Welcome back to the channel. Welcome back to another video. And of course, as we continue our free mentoring here on YouTube for our strategy, welcome back to FXN Trading Group and Trading with Market Makers TMM24. Welcome to week 5, guys. So this week, guys, I was actually going to make the video specifically talking about entry triggers. But I got a lot of questions regarding peak formations, market structure, things of that nature, especially with resets. So I want to make sure that before we move forward, all right, that I address all of the questions that I had regarding market structure, peak formations, resets, failed resets, things of that nature. So what I'm going to do this week, we're going to go ahead and I'm going to break down for you as simple as possible, as much as I can, the peak formations, resets specifically, because I had a lot of questions about resets. So hopefully this will answer all of your questions so we can move forward to the entry triggers for all the different patterns for both London and New York sessions. So we got a lot of content still to cover, guys. It's nothing what we've covered yet. So we have a lot more content to cover. So just be patient as we get through all the material. If you're new to the channel and you're new to the series, please make sure that you go watch week 1. It's in the FXN Mentoring 2024 playlist. If you're new to the channel, hi, my name is Mark and I've been trading since 2011, and I'm just here to show you everything that I know about my strategy that I've been trading with for over about 7 years now. So let's get right into it, guys. Let's jump into the whiteboard and let me break this down for you as simple as I can so you could feel more secure about what you're looking at. So let's go ahead and jump over to the whiteboard, guys, and let's start to break this down for you. All right, so here's the whiteboard, and then here is your normal market maker cycle. It's something like this. Now, let's just say, for instance, that this cycle is GN, so pound NZD. Now, we know that right now, pound NZD is averaging about 158 pips per day. So that 158 pips, you're going to times that times 3. Okay, and that'll give you, so 474 pip market maker cycles, meaning that from the top to the bottom is 474 pips big. Okay, this is if they go 3 times ADR. Okay, so in a perfect world, this is how it would split up into. And basically, the way that it would work is each one of these legs here, okay, each one of these legs is basically 158 pips. Okay, that's how the math ends up working out. Okay, each one of the down moves is 158 pips, basically 1 time its own, ADR. Just because it's like this, or that this is the perfect scenario. Now, there are going to be situations where this is not going to go 474 pips per cycle. We could have something in the range of, let's say, 400. Let's say they can go 400 pips down instead. So let's say that this cycle here is 400 pips. Let's say it's 400 pips. If you take 400 pips and you divide that by 158, you're going to get 2.5 times ADR. Is that enough for a full cycle based on what we know? Yes, it is. Yes, it is. As long as you get, the crossover down here, okay, of the 13 and 50, and as long as this move here before you start to get the pullback is at least 1 time, so 158 pips, yes, this would be a valid first, full cycle. Okay, just remember that this is just giving you an idea or a range of where you can project out how far down market makers need to go to complete a full cycle of at least 3 times ADR. So just keep that in mind. Now, let's say that the opposite is, let's say that this cycle here, is not 400 pips. Let's say that this cycle went 600 pips. Let's say that this is a 600 pip cycle from here to here. If you take that 600 pips and you divide it by 158, it gives you 3.7. So it gives you 3.7 times its own ADR. Now, is that still a good cycle? Yes, it is. It's within the range that we talked about, right? It's within the range of 2.5 to 4.5 times ADR. As long as within that range, and you again, you get the crossover, you get the 1 times ADR here. That's within the range. Now, there's going to be cycles that don't look like this. That's another thing. There's going to be cycles that don't look like this at all. There are going to be cycles that may look more like this. And let's just say that this is still GN, same thing, 158 pips, but it looks like this. We ended up getting just a one-legged pattern at the bottom. Let's say from here to here is 500 pips, right? We know that if we take 500 pips and we divide it by its own ADR, which is 158, that'll give us 3.16 times ADR as this market maker cycle. So we're not really worried about these levels. Okay, we're not really worried about whether you get an M here, an M or a W. We don't care. All we care about, okay, is how long, how far did price go from the nearest peak formation. Okay, so if you have a peak formation here, and then you go down, and then you create a W here, and then you go up again, and then you come down again, right? And then you make another W here. We don't care what this looks like here in the middle. It could literally look like this. We don't care if there's levels in here or not. We would like it to be levels in here because it makes it easier for us to identify, but it doesn't have to be. So the only thing that we care about is from this peak to this low, how far is this? How many pips is it? And does that fit between our 2.5 to 4.5 model? That's all we care about. That's literally all that we care about. We don't care about what it looks like. Those are no longer requirements for us anymore. You know, it used to be that we were so worried about, okay, where's level 1 or where's level 2 or where's level 3. Like, I found that to be more confusing to more people, to more traders than anything, was this level counting stuff. So let's get rid of it. How else can we count that makes it easier for us to figure out our directional bias? Let's talk about directional bias real quick because this is going to be very important to the cycles. Okay, so I try to always keep everything as simple as possible. All right, because I don't want, trading is already hard. All right, it's already difficult as it is. We don't want to make it any harder. What I've done is I've simply made the strategy for myself and for everybody else just simple. Those patterns that we talked about, specifically type 1s, 2s, 3s, and 4s that happened in London, right? Those patterns, the way that we're going to take those patterns, guys, is we're going to make sure that we're going with the trend. So here's what I mean by that. If you have an M here that was just formed, and this is now peak formation high, what movement should you be looking for, right? We should be looking for sells, right? All the way down, until we get to here. So now, once you get a peak formation, you're going to trade away from that peak formation. So once you get a brand new peak formation, the only thing you're worried about is finding type 1s, 2s, and 3s going away from this peak formation. That is your directional bias. So at the beginning of your trading in London specifically as well, if you're coming into the market and you're looking at the charts and you're like, okay, cool, I have a brand new peak formation high here. What are you looking for? You're looking for patterns, type 1s, 2s, 3s, or 4, that will give you a sell option. That's it. It's very simple. Okay, you're trading basically you're trading away from the closest peak. Okay, same thing if we were down here and we just created, we just had, let's say, this whole cycle, and then we just made a brand new peak formation. We had the crossover, this right here becomes a peak formation low, right? We had the crossover, we had the 1 times ADR and everything, and we're right here. What are we looking for when you come into that market? We're looking for buys. We're looking for buys. We're looking to move away from this. Okay, so the patterns the 1, 2, 3, and 4 patterns. We're looking for buy options. Okay, that means that if it's a type 1 buy, guess what? It's going to come sideways. It's going to do this and then go up, right? If it's a type 2 pattern, right, it's going to consolidate in Asian session, and then you're going to get the W, and then you're going to look for buys. If it's a type 3, what is it going to look like? If it's a type 3, it's going to go up, come back down, tag the middle, and go up. Okay? If it's a type 4, it's going to do what? It's going to break through. If this is the Asian range here, it's going to break through, come back, retest a high, and then go up. So the peak formations allow you to basically identify your directional bias and which direction you're looking for a specific trade setup to form. Now, does that mean that all the trade setups are going to be buys going up? No, it doesn't. Are you going to get like beautiful, sometimes you'll get beautiful type 2 patterns that are actually sells, right, that do this? Yes, but we don't trade those because we don't trade against the directional bias. Please understand that. We do not trade against the directional bias. I don't care if we're all the way up here. Always trading away from the closest peak. All right, so always trading this way if you're coming off a peak formation low. And if you're coming off a peak formation high here, okay, we're trading down away from it. Once we get close to 3 times ADR, what I'm doing is I'm looking for other pairs that have just created a brand new peak formation low or a brand new peak formation high so I can trade against, away from those. Once the pair, let's say that this right here is GU, okay, and I've been selling this thing now for a couple days, and now we're getting close to 3 times ADR. Well, guess what? I'm going to leave GU alone until it creates a new peak formation low, okay, and I'll look at my other pairs. I look for a setup on GJ or GA, see if those have created a brand new peak formation. The goal for you as a trader is simply this. Every day when you come into the market, can you identify a brand new peak formation that has just been created so you can trade away from it? Okay? Because if a new peak formation has been created, it's very more likely than not to go away from it, right? Compared to trying to sell something down here that's already at 3 times ADR. So to keep this strategy simple, all we're doing is we're identifying the newest peak formations and we're trading away from them. Either type 1s, 2s, or 3s, or 4s if you're looking at London session. So peak formations, let's talk about resets. Let me draw out a reset for you. So here we have a normal cycle, right? A normal market maker cycle. All a reset is that market makers, they want to go from here all the way down to here. But they can't do that because from here to here is 800 pips. So you obviously can't do it in one cycle. So what they do is they make a full cycle here. They go up. They make you think it's a brand new cycle because it's a brand new peak formation low. It gives you the crossover and everything. And then as you're right here expecting to look for buys to do this, they do this. And now this becomes a brand new peak formation high. And now they can basically come all the way down to here and create a new peak formation low and get to their goal. So all they basically did was they split this into 400 pips and then this one into 400 pips. So all a reset is just market makers trying to extend out past a regular cycle. Basically go past the regular limits of a regular market maker cycle. That's all it is, guys. Let's talk about failed resets. So failed resets are basically this. You have the very beginning of a cycle, right? It gets to the very end. It gives you the peak formation right here. you have the crossover and everything like that. But as soon as they get up here, market makers are like, man, we don't have enough orders to continue to do this. So we need to go back here. We need to go back here and re-grab some more orders that are all here. Because all the orders that are down here are sell orders. They're sell stop orders that are down here. So let's go back, grab some, and then we can go ahead and now do the cycle. So this becomes a failed reset, and this just becomes a brand new peak formation low. That's all it is, guys. Failed resets are just a way that market makers can go back down and grab more orders. I've drawn this out for you. Let me go ahead and now show you on the charts what these things really look like and how you're going to be able to break it all down. All right, so the first thing I want to do is I want to show you failed resets so you can understand. Okay, so from here we have a peak formation high. We're going down to a peak formation low. Okay, now look what happens. We get a peak formation low, and then boom, we go up, and then look what happens. We come right back down. We don't break it, right? We don't break it. We basically grab orders. We go back up. They're like, man, we don't have enough orders still, so let's go back down again and get some more. So they come back down again for a third time to retest it and get more orders. Once they have enough orders that they need, then they go ahead and make the move. And then here is the move that basically went from July 3rd all the way to July 27th. Now, again, I told you that not all market maker cycles have levels, right? Do you see any levels in here? You see maybe one right here, right? You see how it's just straight down and then boom. This one as well. Same thing. Just straight down, come back up. Okay? Now, look. Here's another cycle, right? There are multiple levels, more than 3 levels. Okay? Here, this pair is a really good example for resets. You could see how we created a peak formation high here. We came down, they realized we don't have enough. They go back up, grab more orders, and then boom, they go straight down. Now, on this, from this peak formation high to this peak formation low, you don't see any levels really, right? You see one here, maybe 2 there. But look what happens. You get a peak formation low created here. You go up 1 times ADR, and then look what happens. They reset because the ultimate goal, guys, for market makers, when they started this, when they started all the way up here, their goal was to get price all the way down here. I want you to look at this. All the way down here. Now, it's so big that we can't even fit it on the screen, but I want you guys to realize how big it is. It's 950 pip. So they wanted to make a move of 950 pips. Okay, so how are they going to do that when, let's say, Euro Swiss's ADR is only about 60 to 65 times ADR? Or you're going to need a lot of resets, right? And so here the resets begin. So from peak formation high, you went to peak formation low, came up one times ADR, and then boom, dropped. Same thing over and over and over again. They just kept resetting, resetting, and resetting until they got to the end goal. So all they did was just keep resetting and resetting and resetting all the way down until they get to their end goal. Once they get to their end goal, they're like, all right, cool. We've gotten to the end goal. Now what we need is we need to grab, since we've been going down a lot, we have a lot of traders thinking that this downtrend here is just going to keep going forever. So you know what? Let's go ahead and create another full cycle back up. Let's create another full cycle back up again so we can grab all of the orders, okay, that are literally sitting on top of all of these resets that we just did. Okay, there are orders sitting on top of each reset. So they went up and they grabbed 2 resets worth of orders. And then here you could see created a peak formation high, went down. They're like, we don't have enough yet. Let's go back and grab some orders that are now sitting here, some buy stop orders that are sitting up here. Let's grab those and then cool. Now we can go ahead and continue the move. So this is all market makers do, is they're always just seeking and looking for more orders. So now let's go to a clean chart. Let me show you how you're going to break down a chart from scratch, and you can do this on any single chart. You can do this on any single chart. It doesn't matter what the chart is. Let's do like here. Let's do Euro USD for example, and let's go down to a different time. It doesn't matter. Let's go to March. So when you get to a brand new chart, and when you're going to do this, because this is what you're going to do essentially. Here's a chart. Where do you even start? The first area that I always start at is I start at a brand new peak. So if you're looking at this chart, where are obvious signs of peak formations? Well, this would be an obvious peak formation. This would obviously be a peak formation. Okay, so we could start there. Now, the first thing that I need to do is, obviously, I'll go ahead and mark these with the box, right? So this rectangle box, this is going to be up here for you guys, this rectangle box, okay? Just mark it and mark it here. So now, what I need to know is I need to know what is the ADR here so I can try to make sense of this. Okay, so this is where you go into replay up here, and let's say you put it here, and then you go ahead and you turn on the Asian range indicator. And then here, it gives you, here's the ADR. You see this, 63, 63, 67. Now, once we get this, okay, we need to make sure and verify that this is correct. So how do we do this? So the first thing we need to do is, how big is this? From here to here. It's about 291 pips. Okay, so 291 pips. Now, if we look, we're averaging, let's just say from this point here to here is 219. If we're averaging about 68, because this is different numbers each one, right? 71, 70, 68, 67. Take the average of it. So if the highest is 71 and let's say the lowest is 64, then I would say the average is somewhere around 67, give or take 68. Okay, so you take the 219 and you divide it by your average. In this case, I'm just going to average it by 66. Okay, so if I take the 219 from here to here, and I divide it by the average of 66, it gives me 3.3. So that tells me that there's actually a cycle right here. So that is an actual peak formation. So what I do is I grab the text, right, and I'll put in here peak formation high, so I know what it is. I'll grab the text down here, same thing, peak formation low. And then I will go to the side here, and then there's this tool called the curve. And then I'll literally just tag it from here to there. So I know the cycles that are happening here. Now I want you to see when we go from here to here, it's about 148. If you look at the numbers, 64, 61, 63, this is averaging about, let's say, 61. So if we take our 145 and divide it by 61, we end up getting 2.3 times ADR. Is that within the range of 2.5 to 4.5? It's not, right? So now we're going to assume that this is going to be a reset because it did not make a full cycle and also broke the top to continue the move. So now we just need to go ahead and go from here to here. This is also 217, but I want you guys to see the numbers. Look at the numbers, 63, 62, 62, 62. So this, from this low here to here, it's averaging about, let's say, 62. So we take 217 and we divide it by 62. That gives us 3.5. So now we can say this is a reset. And we always do this when we get resets, right? This happens to be a peak formation low / reset. It's a peak formation low because when market makers reset it, the reset becomes a new peak formation. Okay, and then we do the same thing. We'll put the curve to here. And then we can just take this. For you guys that are beginning, for you guys that are beginning, I think it's important to write down what is the average ADR that you used for this. What is the average? It just helps you know without having to go back and think about it. Okay, so what I want you guys to do is when you're labeling this stuff, I want you guys to put in the ADR that you guys used. So in this case, we use what, 66, right? And it equaled out to whatever it equaled out to. What was it? Like 3.5 or something like that? Yeah, 217. So 66, and it equaled out to 3.5 times ADR. You're going to do this. And then the same thing here, where you took your 217 or 219 and you divided it by 62. It gave you 3.5. So, I mean, same thing. You're just changing it. But this allows you to basically track, right, what was the average ADR that you used. And this is, I think, important for when you first start doing this. So now that you have this right here, now we can go ahead and start building out the rest. So now we let this play out. We let this play out here because now we know the ADR. Now, one thing also that I want to mention is the fact that every single cycle may be or may have a different ADR. Okay, like for example, you saw that this cycle, the average was 66. This cycle, the average was 62. So what I'm getting at is I don't want you guys to think that, okay, I see that the average ADR here is 66. Now, the whole thing is going to be based off of 66 pips, because it's not. Every actual cycle has its own ADR range. So please, please, please understand that. So now as we watch this play out here, we can start to see the ADRs, and we can start to make more sense out of everything here. So we could see 59, 65, 65. Okay, how much is from here to here? 249. So 249, let's say we're going to use 65. Okay, so 249 divided by 65, that gives you 3.8. So we know that this is a full cycle. So this right here is a peak formation low. This right here is a full cycle. So we'll mark it as such. And then now look what we have here. You see how price action went up and then dropped? This, we already know this is a reset. So this is a reset. So we'll go ahead and we'll put that box there. We'll label it peak formation high reset. Okay, it's a peak formation high because it's a peak formation high, not a peak formation low. It's a peak formation high, and then we're going back down again. So now, same thing. Make sure that you label this cycle, right? So you know what you used. So in this case, we used 65, and it was 3.8. So that's that cycle. Now notice this next cycle here. Notice how the number is creeping up now. 69, 72, 76, 80, 81. Notice that? Every cycle is going to be slightly different. Okay, so now what do? Well, obviously this went down and then came back up. So we know, just by looking, if we put on the EMAs here, clearly we're going to have a crossover happen. So this right here is a full cycle. By the way, look where the reset went to, by the way. Went to the 200. This reset passed the EMAs here, but this reset went to the 200 and the 800. Okay, so now if we measure this out from the top to the bottom, what do we get? We get 276. Okay, so 276, and then now what is going to be the average that we can use in here? So for averaging from 72 all the way down to like 80, I'm going to use, let's say, an average of about, let's say, 75 or so. That gives me down here a new peak formation low. Okay, that gives me a new peak formation low from this reset all the way down. And we used, what do we use, 75? 75, and that gave us 3.6. Okay, boom, now we're going. Now let this play out even more. So now we have this right here that went from the peak formation low and then reversed. We had a crossover, right? You see the crossover. So now is that crossover is this enough for a full cycle? I don't know. Let's measure it out. We go from the bottom to the top here, and it's only 154, and you can see we're averaging about 80. So if we divide 154 by 80, it's only 1.9 times ADR. So this is not a peak formation high. So what do? We don't do anything. We let this thing keep playing. Now you see, if we stop it now, can you see what happened? Can you see what happened? Where do we went from peak formation low to where? The 200 EMA. What happened once we got to the 200 EMA? It just kept going down and down and down. So really, what this ended up being was just simply a reset. Okay, that's all it was just a reset. Now we have to wait for a new peak formation low to form. Now, one thing that I want to make sure that you guys know, please, if anything, please pay attention. It'll save you a lot of mistakes. Once you make a reset, not a failed reset, but an actual reset, you have to have another full cycle. Let me repeat that because this gets everybody messed up. I've seen it over and over and over again. Once you have this reset, once you say that this is a reset, that means that there has to be another full cycle that happens. It has to be another full cycle. That is not optional. All right? Please, please, please remember that. It is not optional. All right? It is not optional. Okay, so now we're just literally waiting for another cycle is all we're doing. And here we probably have another cycle. You see how you had the crossover right here? So now let's measure this out. At about 285 pips. 285 pips. And you can see we're going anywhere from 80, what is it, 88? No, I'm sorry, 68, 71, 74, 76, 80, 80. You know, we have a big range here, right? So what do? Do the best that you can, guys. This isn't a perfect science, okay? This is not a perfect science. So if we're starting from 80s and we're working our way down, okay, we can use a simple number of like 75 because 75 is in between the 80s and then down to the 68s that we ended up getting here. If you want to use 78, go ahead. It's not a big deal, all right? But if we take the 200 and what was it? 286 and we divide that by the 75, that's 3.8 times ADR. That's within our range, right? So that's great. Here's peak formation low. We do that, and then we know that we used 75 for this one, and that one gave us 3.8 times, and then we just keep going. So once you get this peak formation low, right, once you get it confirmed and everything, you're looking for buys. All this whole section, you're looking for buys only, buys only, buys only. This whole section going down, you're only looking for sell setups, sell setups, sell setups, sell setups. That's all you're looking for is sell setups. And this section here, once you get this peak formation, you're looking for buys. And then once you get to, to an area like this, where you're getting rejected, you're like, wait a second, why isn't it going up higher like I expected to? Okay, well, you start to identify, okay, well, this may be a reset, right? So for me personally, I don't start to trade, these pairs until we get a confirmed a reset, okay? Because it starts to get really messy if you start doing that. Okay, the only part that you're going to lose on when you trade this way is when you get caught by a reset. That's it. Anyway, so we keep waiting for a new peak formation to form essentially. Now, there's going to be times, and you will experience this a lot with JPY pairs. Like actually, what we just saw on all the JPY pairs, especially I believe it was like Euro JPY, that shot up like it just kept going, never stopped. You will experience sometimes the JPY pairs move like an obscene amount and not even bounce back. So that is possible, but it rarely happens. So now, how far up have we gone up already? So we're getting into the 282 range. I want you guys to notice something. I want you guys to notice, what is the ADR? 62, 60, 65, 64, and it actually starts to get lower. 59, 57, 57. You start to see that, right? So when you start to see that, this has to be 2 cycles. It's too long not to be, more than 1 cycle. Look how long this is. See that? Look how long that is. And it just keeps going up and up and up and up and up, right? So there are multiple cycles. So how do we break that up? Well, let's go ahead and start identifying, you know, where are the major pullbacks in this? The major pullbacks that I see are in this range here, in this range, obviously in this range here. Okay, those are the major ones that I see. Now, if we just go out and do this, this is 216. If we have 216 and we're averaging about, let's say, 62 in this particular range, that right there gives us 3.4 times ADR. Okay, so can that be a full cycle? It can. Okay, it can. Now, the problem that most people will be like, okay, well, we didn't get a crossover of the 13 and 50 EMA. We did get it all the way up here. Here's a crossover, and then it just kept going. Okay, so in these situations, because this is going to happen, guys. All right, I told you this is not a perfect science. This is all done based off of experience. All right, and if you haven't had any experience, you haven't seen the thousands, literally thousands of cycles that I've seen. So I'm telling you, this is the only way to break it up. Okay, we're going to go up here and we're going to put this into a peak formation high, and then this right here is going to be our reset. So that's going to be peak formation high, and then this is going to be our reset. And then we'll put this on like so. And then now we'll move up, start to look at the ADR. It's still around the 58, 60 range. Okay, cool, no problem. So we now go from the reset. Let's go up to the next major, structure before we get a pullback, which is up here. That's 210. So if we take 210 and we divide it by, let's say we're averaging about 57, we get about 3.6. So that right there is another peak formation high. There's that. And then let's play this out real quick. And then here we go. So we obviously know if we're just coming off a peak formation high, this right here, it's going to be a reset. So that right there is going to be a peak formation low / reset. And then we're going to go ahead and measure the rest. So from that reset to here is another 155. And then the average, let's say it's going to be around 60. So that's 2.5 times ADR. That's enough. So there, we just did that entire section. Let's turn everything off for a second. So we just did that entire section right there, mapped it out. So this is how you break down a chart. Okay, now granted that we started, we went back into replay, back into March or whatever, to 2021, so we could do this. But if you're starting out, on a brand new pair, let's say, you're not having, remember that if you're starting out on a new pair, let's say you want to be like, all right, let's look at, whatever, AUD CAD, right? You're not going to go back to 2021, you know what I'm saying, and map the whole year out, in real life, you know what I'm saying? Like you're doing this because you want to get good at it. But when you get to it, when you're comfortable, when you get to a new pair, you come to it and you're like, all right, cool. It's the same thing, guys. You at least want to get maybe, a few months in. So what are the obvious points here on this particular pair that we can look at? Let's just go, to a 2-hour chart real quick so we can get a good idea. Right? Think about it. What are the obvious points of peak formation highs and lows, right? Peak formation highs, definitely going to be here. Peak formation low, there's definitely going to be one here. Obviously, this is going to be one. This might be a scenario where we get a failed reset, because you can see here, if we go up to the 4-hour time frame, you see how it creates a multi-day W here. So this is very likely a failed reset. So let's just fill this one out real quick so you could see what I'm talking about. Okay, so if we start, let's just start out from the very top here. The same thing. Turn on the ADRs. turn on the Asian range indicators, right? And here's your ADR. We're just going to go back here. Let's go to right here. And this will give us the rest. All right. So we're doing the same thing. 69, 68, 63, 67, 68. So we're averaging 68, 69, right? So if we just take 69 and we times it times 3, that gives us about 207 or so. Okay, so if we go from the very top and we go down about 207 pips, I mean, look, we don't even have to go down that far to see. Okay, we're at 259 here, and we can already see that there's obviously this is going to be a peak formation, and the next one, the next little retracement is going to be a peak formation. Okay, so let's do this one real quick. So for averaging, what do we do again? 68, right? Let's say if we do it from here to here, 154 divided by 68, 2.2. Not enough for a full cycle. So guess what? We got to come down here. What's 252 divided by 68? 3.7. That's enough for a full cycle. So here is your peak formation low. This is going to be a reset, obviously. So we can already mark that. So that's going to be peak formation high slash reset. This is obviously peak formation high. Okay. And then boom, we do the exact same thing as we just did on Euro USD. Okay. Let this play out because we already know what the average is, which is, around 68, 67, 68. That's what it's averaging out now. Here we go. This is definitely should be a peak formation low right here. Obvious reasons, we had a big spike up that made the crossovers turn, right? The 13 and 50 crossover happened over here. So if we measure this out, what do we end up getting here? Hell, let's do right here, guys, right here, because we did get a crossover here as well. So this is 238, and we're averaging about 66 on this one. So that's 3.6 times ADR. Okay. Now, if we do this, do we have enough to get another cycle from here to here? Is the next question. Okay. This is averaging 68, 70. And if it's only 150 and we divide that by, let's say, 68, it's only 2.2. So guess what? This is not going to work out like that. Okay? And here's why I bring this up, is because this is going to happen to a lot of you. Okay? But look, the 50 and 13 never crossed over. It didn't cross till all the way over here. Okay? So my point is this. When you're looking at this, okay, and you can see that if you use this as a peak formation and this as a reset, okay, but from the reset to the new peak formation low is not enough for a full cycle, then it's wrong. Okay, so what do you do at that point? You just remove this and measure from the reset all the way down to the peak formation. It's about 300 pips. Okay, if you take 300 pips and you divide it by the average here, which is somewhere pretty close to around 70 pips, let's say, it's 4.2 times ADR. Does that fit into your range? Yes. So this will work. Okay, this will work. And it goes from here, okay, and then you just keep going. We had this one already marked off, remember? So on this one, it's the same question, right? This is not a full cycle. I would not expect it to be a full cycle. Let's see. It's only 200 pips. And then we're averaging, what, 74? So 200 divided by 74 is 2.7. It actually is. So this is a full cycle right here, which is fine. This will be a peak formation high. We keep playing it. We already know a peak formation low is going to form. It formed right here. Here's your peak formation. So here is, you see how this ADR now is changing, 92, 92, 92. Now we're in the 90s now. Okay, so now we're in the 90s. You see if the 800 is just holding price up there, holding it, holding it, holding it. Now, how many pips is this, by the way? This is 210. This is not enough for a full cycle. For averaging, 92s, we dropped down to about 70s here. So we're about, I would say, give or take about the 85 mark or so. So if we're at the 85 mark, then it would be about 2.6 times ADR. Okay. So we started, in the 89s, 92s, and then we started to drop off to the 70s. So I used about an 85, an 85 ADR essentially, right? So this would be peak formation high here, and then now we can see that this next cycle, you could see we had a crossover here, but this is not enough, I don't believe, for a full cycle. It's only 158, and this one is 203. Okay, so 158 was from here to here, and guys, we use wick to wick. All right, also, we don't use bodies, we use wick to wick. All right, so 161, actually. 161 divided, let's say, by 68, that's 2.3 times ADR. That's not enough, right? If we go down here, that's 265. We definitely know that that's going to be enough. 265 divided by, again, 68, 3.8 times ADR. That's enough, right? So that's our actual peak formation low here. Okay, so we go from there. Now you see we had the spike, came back. We measure that. Is that enough for a full cycle? 245. What are we averaging? Where it went from 72, 79, 84. So I would say I would average this at around, let's say, 77, give or take. 77 or so. 250 divided by 77 is 3.2 times ADR. That's another cycle there. Go ahead and put in peak formation high. And we just keep following it. I mean, honestly, that's all we do. So we just keep following it from there, guys. We're averaging about, now we've moved up to back into the 90s, right? 90s, 87, 85. So this is going to be a bigger cycle than the previous ones. Well, here we go, right? So here's that peak formation, right, that we had marked out before, right here. So now let's measure this out. It's about 388 pips. If we divide that by the average, which I think the average here is going to be around 87 pips, it's going to be a 4.4 times ADR. Okay, so that's a peak formation low right there. The reason that we don't break this up here, let's say, we don't say that this is a peak formation low here, is because we're not going to have enough for a full cycle here. Do you understand? So that's why we don't break it up there. Okay, we could see if we could possibly break it up from here to here, but that's only 200 pips. That's not enough for a full cycle, right? So that's why this is the full cycle. And then here's the example that I was talking about of a failed reset, where you have a brand new peak formation low. You think you're looking for buys, okay? But then it comes back to the 200 EMA. It comes right back down to retest those same lows, and then they take off. So this section here in the middle, basically it's like the apex of the W, right? So let's say this is the W here. The apex of the W is the failed reset. The apex of the W, or the M, is the failed resets. And you'll notice that this is a multi-day. So the first leg here is July 1st, and the second leg is like 11 days later. Okay, so this would be a failed reset. So failed resets, we just put FR, failed reset. Okay, this would be another peak formation low, and then we go from there. Notice ADRs in the 70s, 80s, pretty steady around 80 right now. So if we take 80 times 3 is about 240 pips or so, is what 3 times ADR is. So we're almost getting there right there to about 3 times ADR. You can see right here, from here to the very top, it's 200 and what, 86? So 286, divide that by 71, 4 times ADR. There's your peak formation high. Bring out the curve, put it on here. This is peak formation high. Keep playing it. There you go. What just happened? You were looking for sells off the peak formation. What just happened? Reverse, right? So this is what? This is a reset, right? So this is a peak formation low / reset. There's another cycle right there. Here's another peak formation high. They're looking at about 234 pips. We divide that by 71. You get 3.2 times ADR. Okay, you can take 234 divided by 74. You get 3.1. I mean, it's all about the same range. And then you literally keep going. The whole time you're looking for sells, 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 sells. Throughout this whole time, guys, you're still looking for sells. Throughout this whole mess. Okay, if you're trading just literally one pair, which I don't advise you to do, but if you're trading one pair only, you're still, throughout this whole time, you're still looking for sells because it has not broken your peak formation high. So you're still throughout this whole time looking for sell, 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 sell. Sell setups, sell setups, sell setups. That's all you're looking for. Okay? The cycles are literally just in all kind of directions, in all kind of, in all kind of shapes, I should say. Market maker cycles come in all kinds of shape. They can look very nice with these levels like this, or they can literally look like this crap here. Okay, so it's what it is, and that's why we don't focus on levels like that anymore. We literally focus on the actual movement of price, which is what matters. Okay, so here we just had a crossover happen. We went 287 pips, and then we averaged about 65 or so, give or take. What was that, 267? No, 287, and we average about, 66, 68 pips or so. There's 4.2 times ADR. There's another cycle right there, and I mean, it's just, you do the same thing over and over and over again. That's it, guys. That's literally, I mean, yeah, we've caught up to price action now. So that's it. We just broke down a whole nother chart from, from a few months ago. We broke that whole chart down again. Now, understand, guys, please, please, please understand. All right, this may look to you guys, and you guys see me doing it and stuff, and I do it very easily, but please understand that I've been doing this for years. Okay, please understand that I've been doing this for years. All right, so whenever you start doing it, it may seem very frustrating. It may seem like, I don't get it. I understand that. I completely do understand that. This is the hardest part, okay? But once you figure this part out here, it'll help you with your trading because this sets your directional bias. If you don't have a directional bias, you're saying, okay, am I going to buy or sell? Buy or sell, buy or sell. You're gambling. You're 50-50 gambling at that point. We don't want a 50-50 proposition. This is what gives you your advantage, knowing in what direction to trade. So at some point, guys, you're going to be able to go to any chart. It doesn't matter the chart. You're going to be able to go to the chart, okay? And you're going to be able to map out the chart. You're going to be able to literally go to the chart and just map it out and just know that, you're going to mark off the most important parts off first. The obvious points, the obvious points first, like I'm doing here. I'm just marking off the obvious points to me that make sense. Then from there, I can go in now into the details of each cycle and see, do I need to split this up into two to where it's basically, a peak formation low here and let's say a reset here, this is obviously going to be a full cycle. This is probably going to be a reset. I mean, so you'll start to see this as you get better. This is probably going to be a failed reset here. You're going to start to see this, guys. And I literally just did this without even like thinking about it. This is what I know. We're going to make this a peak formation low. This is going to be a peak formation low. Essentially now, all I want to do is I want to see, is this really a peak formation low and this is a possible reset or a failed reset, excuse me. I'm just going to fill this out and I'll see how this comes out. We're going to say this is a peak formation low / reset. And let me just measure this. Here, let's just say that this is peak formation low here and that this is a reset. All right, so I just did this without really measuring anything, okay? Now I want to see how accurate I was. I'm going to go over to, to the USD CAD that I actually have mapped out already. And I want to see how accurate or inaccurate am I. When did this start? May 11th. May 11th. Yeah, so May 11th. So here's what I have mapped out. Peak formation high, peak formation low, reset, peak formation low. All right? Peak formation high, peak formation low, reset, reset low. All right. And then on this one, from peak low to peak high, peak formation low to peak formation high. All right, so basically, this is not a reset. This is actually a full cycle, and this is peak formation high. And then I have peak formation low, reset, peak formation low. I have it as peak formation low, failed reset. Again, I didn't measure this out. Another peak formation low, and then go up to this here. So you see how pretty accurate it is, besides, some resets being peak formations. So this is what I want you guys to be able to do when you go up to any chart without even first measuring it, right? Eventually you're going to get to be able to do this, okay? Because you've seen it over and over and over and over again. And it's just literally like ingrained into your brain. But just understand that it just takes time, man. It takes time. It takes a lot of work. It takes a lot of time. But you too will get this. I promise you. All right, guys. So I hope that this video brought you clarity to the market structure, peak formations, and resets. So that way you could have all the tools that you need when you're looking at these charts to be able to break down the market structure, just like I've showed you in this video and also in the previous videos of this series. Guys, if you like the content, please do me a favor, just like the video. Subscribe to the channel, share the content so others can see. I appreciate you guys' comments. Of course, if you have any questions about any of the videos, just leave a comment and I'll answer the question. Until the next week, guys, thank you so much. Have a great rest of the week.